My name is Alexa. I'm your head of online community here at Housecall Pro. Thank you for joining us tonight for tonight's evening update for home service businesses. We are doing this every Monday through Thursday now. So we've changed our schedule. It was originally Monday through Friday, but we're giving you that Friday back to be with your family, to work on some of the things we've given you over the week. Over the course of the week. So Monday through Friday, 5 p.m. Pacific time. So I'm joined by my co-host, Roland. He's a co-founder of Housecall Pro, and Mel, who is our awesome Senior Vice President of People. You can think of them as your in-house business and HR strategy experts. So those are the types of questions you want to be asking them. Each evening, like I said, we go live at 5 p.m. Pacific time. We share the state of the world, which Mel will get into in a bit. And we have a special guest on, or we talk about a broader topics. So tonight we have Hal on. He's a licensed CPA and he's going to be talking taxes with you, which is typically like a scary thing to talk about and an unsexy topic, but he has a lot of really great tips for you tonight. So with that being said, make sure you are subscribed to our YouTube channel. You can watch all of the past videos there. Just go Housecall Pro and YouTube and subscribe. There's a whole coronavirus resources section. And make sure you're in the Facebook group. So I'll drop the link there for you. There's over 2,500 members in there. So many resources, so many people sharing stories, a lot about the EIDL and the PPP, people getting their status updates. So make sure you're in that group if you're not and you're joining from your phone. So that is your intro. I'm going to pass it off to Mel. I'll be back with our special guest in a little bit.
Great, thank you, and good evening. Thanks for those of you who are joining us yet again, and welcome to those of you who are joining us for the first time. I'm Melina Fairley, Senior Vice President of People at Housecall Pro. Please feel free to call me Mel. I am not a reporter or a doctor or an infectious disease expert. Rather, I'm a mom, I'm a proud Marine Corps wife, I'm a homeowner, I'm a business leader, and I'm a human resources professional with over 20 years of experience. So we come to you live to give you a daily recap of what's going on in the news related to coronavirus so that you can spend your days doing more important things. And we come to you every night to bring you information, to bring you great guests, advice, and hopefully just a sense of community during these unprecedented times. So with that said, here's your update for Tuesday, April 14th, 2020. Today, the U.S. Centers for Disease Control reported that in total, 19 states in the U.S. have reported more than 5,000 cases of the virus, and there are currently 29 states reporting widespread community transmission. The Johns Hopkins dashboard, which we look at every night, let's see, there you go. They're reporting over 1.9 million global cases and over 125,000 global deaths from the disease. And in the US, there are over 600,000 cases and over 25,000 deaths. Last I looked at it just a half hour ago. Yeah, there you go. Updates in real time. So this map is this map is a good resource for you to check on what's going on in your state or area. And it's updated several times throughout the day. Today at the White House press briefing, the president announced that the U.S. will suspend funding to the World Health Organization while it reviews that agency's response to the COVID-19 pandemic. So Trump said that the International Health Agency made mistakes that caused so much death as the coronavirus spread across the globe. And he said, quote, "Today I'm instructing my administration to halt funding of the World Health Organization while a review is conducted to assess the World Health Organization's role in severely mismanaging and covering up the spread of the coronavirus," Trump said today at a White House press conference. So we've heard him before expressing concern over how they handled the outbreak in China. So this was semi-expected. There's been some talk and maybe some threats of this, but this was the first time that he came right out and said that we were halting funding for the World Health Organization. Yesterday, we also heard for the first time that governors from several states on the East and West Coast have begun coordinating their plans to return to normal or to relax social distancing over time. So those states include New York, New Jersey, Connecticut, Pennsylvania, Rhode Island, Delaware, and Massachusetts on the East, and California, Oregon, and Washington here on the West. So these efforts will aim to rely upon data and expert input in order to determine the best approach to relaxing social distancing measures.
Yep, so obviously testing and tracing is going to be what is needed to start thinking about how do we reopen the country. And obviously, yesterday we talked a little bit about it, but Google and Apple at the operating system level are making headway on making this a part of all Apple and Android-based phones. which, you know, is most of the ones out there. And that's really a great step in this direction, as long as they keep the privacy intact, to opening up the country here.
Yeah, we're definitely hearing that reopening can't happen in mass without sufficient testing and tracing, and we're not there yet. At the federal level, President Trump is also expected to announce a council that will advise him on planning for resuming normal business on a national level, which could include some of the state governors as well as members of a variety of different perspectives, economic, medical, etc. So finally, in some financial news, an analysis conducted by the New York Times looked at changes in how Americans are spending their money. I know I'm spending my money differently as a result of the COVID-19 pandemic. Yeah, there's the graph if you want to look at it. So this study compared the amount of spending for a number of different commercial sectors, ranging from grocery to restaurants to clothing stores to entertainment. And not surprisingly, down at those big, deep drops, travel, shopping, transportation, groceries had what looked like an increase and then a decline towards the end of March, potentially just returning to relatively normal levels now that many households have stockpiled essential items that we need. So overall shopping and entertainment experienced sizable decreases. However, this wasn't evenly distributed. So the sectors that rely on in-person purchases, such as clothing and movie theaters, saw major spending decreases. But spending on online services, so think of e-commerce. I know my happy moments in the day are when the UPS truck comes down the driveway as we're all, sheltering in place here in Southern California, but also video and audio streaming. So your Netflix and your Hulu and all of the services you use, and gaming. I know my husband finally succumb to letting our son buy some game loaded onto my husband's laptop, which he hasn't seen in 3 days now. So those have all increased. Video, audio streaming, gaming, online, e-commerce have all increased. So certainly these are trends that I know I'm seeing in my own house. So I'm sure you guys are seeing it in yours as well, and also with your customers.
Yep, and then you see that in this graph right here, which is pretty cool. And it was interesting to note too is home improvement, by the way. So Home Depot, Lowe's, Sherwin-Williams. We've heard a lot of our pros are saying that the lines are outrageous because everyone's out at Home Depot, looking to improve their home because they're spending a lot of time there. So home improvement is definitely up. Chances are homeowners are going to screw up, and there's going to be more demand to even fix up some of the things as people are trying to do it yourself. So that is definitely good news.
Yeah, I know we removed a few trees here today. My 13-year-old has, and hacking trees down. We're going to get the stumps out ourselves, but we might be calling in the professionals for that work. Alexa?
And at least it's outside work too, so you can still maintain the 6 feet distance.
Absolutely.
Yeah, I'm definitely feeling the brunt of the gaming industry. My boyfriend, who you can't see because of my screen, is right behind me playing like Call of Duty or something. He's in a gulag. So I feel that. So thank you, Mel, for our evening update. I'm going to bring our guest Hal on right now. I'm going to promote him to a panelist really quick. So give us 1 sec. There he is. So I'm just going to unmute Hal. Hey, Hal, can you hear us?
Okay, I can.
Awesome. Thank you so much.
Can you hear me?
Yes, we can, loud and clear. Thank you so much for joining us. I'm actually going to pass the mic off to Roland and yourself now. And for those of you who are tuning in today, we are talking all about taxes and all the tax implications from the new legislation that's been put in place. And Hal has, I think, 5 big mistakes for you guys not to make this year. So you definitely want to listen up, take notes, just write them down, jot them down. So I'm going to pass it off to Hal, and then any questions you have for him or Mel or Roland, make sure you put them in the Q&A box so we can answer them at the end. And if you're on Facebook, make sure you put them in the ongoing feed so I can copy them and put them into our queue. So I'll pass it off to you guys.
Awesome. So Hal, nice to meet you. You're obviously one of our certified partners here at Housecall Pro. You've been in business for over, I think, 27 years, right?
Oh, no, it's more like 43 years.
So you know the industry inside and out. You've done a lot and submitted a lot of taxes during your day, I'm sure. Obviously, you've done a lot of work with QuickBooks because you're a pro advisor, obviously official CPA, and you work with a lot of home service pros. So Would you do everyone a favor and kind of introduce yourself a little bit here for everyone that's watching tonight?
As you mentioned, I deal a lot with QuickBooks. I've used QuickBooks since DOS version 1. And most of the CPAs that saw it back when it came out in the early 90s laughed at it, thought it was a joke of a program. I thought it was great and just what my clients needed. And so I've been a fan ever since. I've built 3 different firms based on QuickBooks. And so that's what I've centered around. And I love small business. I've started a dozen or more companies myself. I've raised venture capital, brought in government grants, sold off the company in early 1990, 91 when I'd sold off one. Kind of semi-retired, and then friends started calling me up and said, can you help me with this? Can you help me with that? It's about the time QuickBooks came out. And so all of a sudden I was back in public accounting and helping small businesses. But that's where my love is. That's what I like to do. So I do a lot of QuickBooks, and I also do a lot with business taxation and personal taxation. And that is very time consuming. I first met Housecall Pro because I had clients telling me, hey, we're using Housecall Pro. Mm-hmm. And they all loved it. They thought it was a great program, and I haven't heard one say anything bad about it. They just really like the way it works, which that is great. And so that's why we got a hold of Housecall Pro and became, associates of Housecall.
Sure. How many clients of yours would you say are in the home services space just in general? And how many have you helped over the years, would you say?
I don't really have a number.
1 digit, 2 digit, 3 digit, 4 digits?
I've seen thousands of QuickBooks files. We teach classes, and typically, it used to be that we'd offer a free 30-minute consult when we got done, and so I'd go out and see everybody. So I've seen all kinds of different QuickBooks in all kinds of shapes, sizes, good, bad, really, really ugly. But I'd say over the years they're better and better. People are understanding better how to use it, which I think is great. And traditionally I had most of my clients on QuickBooks Desktop. Over the last 5 years, I'd say 95% of new clients we put on QuickBooks Online.
Yep.
Because it syncs with apps like Housecall Pro.
Yep.
And 4 or 5 years ago, I had a client that they do gate systems, like for my HOA. That's how I met them, industrial gates. And I was talking to them, and they said, what can we do? And the main owner said, I work all day, and then I come home and do my books till 9 o'clock every night. He said, I'm just tired of it. Mm-hmm. And so we started looking for, an app they could use. Well, one, we converted them from desktop over to QBO.
Yep.
And it took them about 3 apps before they found what they liked and worked for them. But they went out, they all had phones, they all had internet service on their phones, so they bought a tablet for each truck, so they had something bigger to use. They didn't get ones with internet on that, they just run it off their phones. And so they're doing almost all their work when they're out doing their service calls. They enter everything in. There isn't much to do at night. And so it's given the main owner a life, which is what we all want. That's why we want to be doing this, so we can do it as we go. When you can go out, put in your time, put in what your purchases are, create an invoice before you leave, email from the client, collect from the client, all right there, and you're done. That's the best of all worlds, and that's what technology allows us to do.
Yeah, saves a lot of time. So tell me a little bit about some of the observations maybe that you've made with some of your clients and how they're dealing with coronavirus. Is there anything that stands out to you, or anything from the tax side of things that kind of jumps out at you?
Well, I'm not sure about the tax side of things, although the legislation we've had the last several weeks offers us a bunch of loan opportunities and grants and things that way. How they're dealing with it. Some are very busy. I find people in the construction industry are still very busy. I've got one client that does mold remediation, and he's kind of being shut down, but just specifically because people don't want other people in their homes. taking care of that stuff. It's almost like they'd rather put up with a mold right now than
This is crazy. Sounds crazy to me. You know, you're in
some
your
of
home
it's
all day
got
long
potentially,
now. Yeah,
yeah.
even worse.
So I mean, February was one of his best months ever. He's a fairly new business and has just done great. So some are shutting down that way. Others like us, I've been working 6 days a week, 13-hour days for 3 months now. I'm even though the deadline that's tomorrow, the April 15th deadline's been moved to July 15th, we don't want to be doing taxes like crazy in the middle of the summer. So we've just been pushing to get all that we can done. Plus, I'm heavily involved in client communications. And so we've been trying to work through these laws that have been passed and communicate that to clients. Normally, we send an email out to clients on a communication type piece every other week. 3 weeks ago, we probably sent three out the next week. And we're trying for only one this week. And things have calmed a little bit, but it's just been absolutely crazy trying to deal with it and learn what to do with it.
Yeah, I mean, here we've been doing it every single night, keeping our pros up to date on all the changes. And you know, I swear, every day it's different. There's something new or some new piece of information that's out there. So it's definitely something you gotta stay on top of. And so to that end, let's talk a little bit about kind of the filing stuff. Obviously, I assume most people know you know, what has happened, but for those that are thinking they're going to stay up late tonight, tomorrow to file, what's happened here? What is the extension put into place? Do they have to put anything out now? Can they just wait till July 15th? Kind of what's your advice there?
Yeah, great question. And it's interesting, even though we've been communicating with our clients, I'm surprised at how many have no idea. I mean, they're emailing me and saying, well, are you going to file an extension for me tomorrow? Normally, we would have started filing extensions 10 days ago. So the April 15th deadlines, so this is for individual taxes, if for payment of individual taxes on the federal side, for payment on the state side with 38 states, plus the 7 that don't have personal income tax, 38 states are following the federal. So those are all switched from April 15th tomorrow until July 15th. So no extensions necessary tomorrow. Extensions aren't necessary until July 15th. So it gives us a lot of time to get stuff in without the extension. I'm sure if you're using a CPA or a tax preparer, they're like me, they're begging you, don't wait till July. Let's take care of it this month, next month. You know, May and June are often the slower times for tax preparation. We'd love to have everything done by June 15th. Even if you've got your tax return done and we e-file it, you don't have to pay till July 15th. It's just got to be postmarked by July 15th. This also includes the estimated payment deadlines for 2020. So the first one is due 4/15. That's now July 15th. The second one is due June 15th. Just 2 days ago, they announced that's now moved to July 15th. Some other things that you could do for 19 that you had to do by April 15th, for example, like fund an IRA, a SEP IRA, fund your HSA. Those all had to be done by 4/15. Those are now July 15th. So you can just kind of think these deadlines that we've got right now that are 4/15 have moved to July 15th.
So a lot have moved. So for the pros that are watching this and that haven't filed yet, you got a little extra time, thank goodness. But like Hal's saying, you know, just because you file now doesn't mean you have to pay now. So, you know, there obviously is some time value of that money between, you know, money that should have been going out today versus, or tomorrow versus, you know, July 15th, that leaves a little extra money in your pocket to either float some bills, to reinvest, to do something with. Obviously you're going to have to pay at some point. But that gives you a couple extra months there, which is nice.
You know, and if you got a refund, you want that coming in.
Yep.
So you don't want to wait. I mean, I finished a return today that it's got 5,000 plus federal refund. They owe their state about half that. You know, let's get it filed. They get the federal refund back, and they don't have to pay the state for 3 months.
Yeah, that's a great position to be in because you're still up ahead. So let's talk a little bit about the 5 mistakes, because obviously we're trying to prep for this nightly newscast, and we said you said you've got way more than 5. So we said, all right, Hal, we got time for 5. So maybe let's work our way down this top 5 list of common business mistakes that you've seen throughout the years, that are things that our pros and any of the home service providers that are watching this really need to make sure to avoid. So that way they, potentially, it could cost them thousands of dollars needlessly. So what are those top 5? Maybe we'll start from the bottom one and then we'll finish with the top number 1 mistake.
Well, let me start with these because they're kind of in order. They're not in order of what's going to save you loads of money. Let me see if I can put this screen up here. Okay. Is that showing up on the screen?
So Hal, if you want to share your screen, go ahead and click at the bottom bar, share screen.
That's right.
Awesome, we can see it.
Okay, so the first one is really failing to plan, and I love this quote by former Supreme Court Justice William Rehnquist. It says, "There's nothing wrong with a strategy to avoid the payment of taxes. The Internal Revenue Code doesn't prevent that." And another former Supreme Court justice gave a definition of what's avoidance of taxes and what's evasion of taxes. And I think a great example is he worked at the Supreme Court, which is in Washington, D.C. And he said he lived in Virginia. And he said going home, he could cross a free bridge, but that was all backed up with traffic. Or he could go a couple miles out of his way and pay a toll on a bridge. And so if he paid the toll, he got home faster than if he took the free bridge. And that was like a tax that he was paying. And so it gave him an advantage. If he didn't want to pay the toll, he could take the free bridge. And that was avoidance of tax. But if he had taken the toll bridge and didn't pay his toll, that was evasion of tax. And that's against the law. So avoidance is fine. Evasion is a problem. So we don't want to do any evasion type stuff. Okay, so why tax planning? I call it the key to financial defense, and it guarantees results. If you do the things right, you actually can save a lot of money. And I'm going to show you a few of those ways to do that. So let's look at some other. So one of the things I call audit paranoia, and I think this screen's pretty interesting. So we're going to talk about entity selection next, and that's a big area where we can save a bunch of money. So some are Schedule C, they're a sole proprietorship. And when a business starts, I advise they do that. It's the easiest to do. It's easy to get out of. But those if they're under 25,000 revenue, they've got about a 1.2% chance of being audited. If they're over 25,000, up to basically 100,000, they're at 2.4%. And if they're over 100,000 revenue, that jumps to 3.6%. So I start most of my clients, say, let's start as a sole proprietor in Schedule C, but once you hit 25,000 revenue, we need to look at a different type of entity for you. Because you're not only got audit problems, but we can also do things to save taxes, and that's what I'm going to talk about in a minute. So the partnership and the S-Corp options are the two that we tend to look at. And when you run those numbers, those could be 10 to 15 times less likely of an audit than when you're on a Schedule C. So that alone is a reason to change, but there's many more reasons to change because we can do the tax planning that's going to save you money.
Yep. And which one of those is the LLC?
What's that?
Which one of those is the LLC?
Well, okay, so an LLC, that's an interesting animal. Back in the 1990s, those were just starting and we didn't see much of those. Now, I see more LLCs than anything. But the IRS has allowed an LLC to elect to be taxed. Well, if you're a single member LLC, you're going to be a sole proprietor. You're taxed as a Schedule C on your 1040. If you're a 2-member or more LLC, you can elect to be taxed as a partnership. That's a Form 1065, as an S Corp, Form 1120S, or as a C Corp, Form 1120. Most of the ones that I see, particularly on small businesses, choose to be either a partnership or an S corp. And there's reasons for each one. In many ways, an S corp and a partnership are very similar in that they pass their earnings through to the owner's 1040 via K1, but each one of them has separate rules, and there's advantages or disadvantages of each one. So we kind of have to look at each situation to decide what they're going to do. If they're an LLC that owns real estate, for example, let's say the business of the owner, well, we typically will take that and put it in a separate entity like a partnership or an LLC taxed as a partnership. And there's lots of rules that give us some advantages there with the real estate. We don't really ever want to put real estate in an S corp or a C corp. So we need to look at that entity. And if you're a single member LLC, to get the advantages, the tax advantages, you're going to need to elect to be an S corp. I have an attorney friend who was my best friend growing up, and he believes that starting everything off with an LLC and then electing whether you want to be taxed as a partnership or S corp. And the advantage of that versus just starting with a corporation and electing S corp status is you can always elect out of that S corp and back into a partnership status. If you
That's
do that,
too.
you can't
Yeah.
go back to an S corp for 5 years. But I think that's wise, and that's what we're seeing more and more. I'm not seeing that many corporations come on and elect S corp status. I'm seeing businesses that probably started as a sole proprietorship became an LLC, which is a state thing, not an IRS thing. It's the LLC, that's the corporate protection offered by the state that's the key there on liability protection. And after a while, as function as a partnership, then they elect S corp status. So I kind of see that progression happening a lot more, where 10 years ago I didn't see that.
Mm-hmm.
So the sole proprietorship, and I'm going to hit these pretty quick, but the reason, all your income, your net income, so you report your net income in Schedule C, you take your deductions off, and you pay income tax on that income, but you also pay self-employment tax, which is 15.3%. And for startup businesses, I often see they pay more SC tax than they do income tax. And that can really get you, it can be really heavy. And as you make more money, I've done some tax returns this year where people are paying $22,000 plus in self-employment tax.
Wow.
Yeah, it's a lot. So part of what we're trying to do with the S corporations, we split it in half, if you will. So on one side, on the left side there, we take a salary. So we take a W-2 salary. But you can see we're not taking that whole big blue box that was on the prior slide. We're only taking it on part of it. And we pay the FICA tax, which is, when you look at that, it's really the same as self-employment tax, because the employee pays half, employer pays half. If you're the owner, you're paying both sides of it. So we're only doing that on a piece of that pie. The other piece of the pie, we're taking what we call either a dividend or a distribution or a draw, but that's not subject to the self-employment tax. And so we're avoiding that FICA self-employment tax on that part of the income. And so people say, well, why don't I just not take a salary at all and just take out all this distribution? Well, the IRS, look, this is a hot item for the IRS. So on the tax return, they're looking at, and it's a separate line item for office or payroll. And so that is something they're really looking at. And when the IRS never even knew this was going on until probably the late 90s. And most of us have been doing it since the early 90s. And they said, well, we got like this 160 returns we're auditing right now. Let's look and see how much officer payroll we got and how much compared to how much it draws. And so they pulled those out, averaged them together. And this is really interesting. And I don't remember the exact numbers, but the officer payroll came in at about $4,700. And the distributions or draws, or dividends came in at about $175,000.
Yeah, so a little skewed there. Obviously, there's a minimum amount you need to live, and I think IRS is looking at that as a barometer for audits and who to investigate a little further.
Yeah, they said Houston, we have a problem. I said, my reaction was, pigs get fat, hogs get slaughtered. Let's be pigs and not hogs. So the IRS came out with some rules, but they're not specific rules. They basically say you need to take a reasonable pay salary. It was what you'd pay somebody else to do that job. So it doesn't count really ownership or return on your capital, return on other employees that you got, but it's got to be reasonable. And reasonable if you're making 30,000 a year is different than reasonable if you're making 150,000 a year. And so it really varies by business. It varies. Are you the only employee, or are you like one of my restaurant owners that has a general manager and has many employees and maybe owns several different restaurants? There we can take a smaller one than the person that's just self-employed and he's really the only one that's making the money. So
Yep, that makes sense.
We're avoiding some tax by doing this. So here's kind of an example. So we've got something that we've made 80,000 for the year. On the right side, you've got the sole proprietorship, 80,000, the SE tax, 11,304. So we got net of 68,696 before we even look at income taxes. With the S corp on the left, we're taking 40,000 salary, so we're paying 6,120 in FICA tax. Our net's 73,880. So we save 5,184. You know, that can fund an IRA, can fund a child's education, college tuition, can fund a nice family vacation. So you've got different things you can do with that. So that's when we start to realize savings. And you can think of, if you get in, you double that, now you're talking a lot of money. So that's what we're trying to do at the S corp.
Yep.
You know, another thing that people do is they choose a wrong retirement plan, or more often than not, they choose no retirement plan.
Hal, can you say that?
Really encourage.
Oh, sorry, Hal, you broke up a little bit. Can you say that one more time from the start of this slide?
Sure.
Thank you.
So I see people that choose a wrong retirement plan, but more often than not, they choose no retirement plan, which I think is even worse than the wrong plan. So we want to be saving some money for retirement. And if you start early, and I know that's difficult when you're just starting a business, and maybe the first 2 or 3 years, 4 years, you can't do that. But as soon as you can, you need to start doing something, because the magic of compounding of money really is huge. And so the longer you can be doing it, the better off you are. And two of the simplest are the STEP, both IRAs or turbocharged IRAs, or sometimes I call them IRAs on steroids. They allow you to do more than a traditional IRA. And they're simple. There's typically no administrative costs. There's no annual administration. There's no tax return to file with them. So for a small business, that's really the way to start. The simple allows you to put a bunch.
Yeah, so your recommendation is start out with the STEP IRA first when you're first starting out, then switch to a simple?
Well, it could be either one. They're both very similar. The difference is a simple allows you to do, say, 14,000 right off the bat. If you had 15,000 income, you could put 14,000 in your IRA. Where the SEP, you're going to be limited to 20% of that 14,000. But as you get more money or go bigger, the SEP may be more advantageous. It also kind of depends on what you've got as far as employees, because you're going to have to fund employees too. And so the SEP and the simple are really somewhat similar. The simple you've got to set up before September 30th of the year to do it. The SEP you've got till April 15th to set it up. And this year that's July 15th.
To push that out. So 401ks, when should a business consider offering that, either to themselves and then employees after that?
Well, if it's just you may want a solo 401k, because it allows you to put more money away than the SEP or the simple. Because on a solo 401k, your admin costs aren't that much. You can do a payroll deferral that's coming out of yours, so you're putting that in, and the company's doing matching and often a profit sharing. as a company grows, they may want a 401k because it gives more options for employees, and a 401k can be done so that it favors an owner. It particularly favors when you've got an older owner and a young workforce, because that allows that owner to put more money away. And I'm not an expert in this. We have one of our managers in our firm handles all of this. He's an expert in it, and he helps people set these up and look at what's going to be the best option for them.
Makes sense. So does a company have to, if they say, hey, we're doing a 401k, they have to offer it to everyone, or same with the SEP or the Simple, or
Yes.
can it just be just the owner? Okay, so it has to be across the board if they decide to enable it for their business.
Yeah, and an owner can't own a separate business where he's getting paid out of, which we often see, and we do for some tax reasons that I'm not going to go into. He has to combine that with this other company where his employees are. So he can't just segregate himself off. He's got to combine those entities together.
Got it.
So there are rules to help you, but there's ways to favor that owner too. And so we help clients with that.
Makes sense.
Here's just a few slides on this. This is on the SEP, or it's really, SEP stands for Simplified Employee Pension. So when it says contribute up to 25% of income, that's really after you back out the self-employment taxes. So it's really 20%. That contribution has gone up a few thousand from when I did this slide. So the simple here says deferred income up to 11.5. I think that's 14,000 now. If you're over age 50, you can do the catch-up, or I call the geezer provision. It's because I fall into that category. You can add additional there. You can do business match or profit sharing in no annual administration. So that's what's great about those two. And the 401k is a little more complex. The deferral has gone up. That's higher than, I don't remember what that is right now. And over age 50, I think is 6,500 now. So higher catch-up provision there. And the max is 55,000 now that you can put in. So that's often why as companies become more profitable, more employees, they switch to a 401k because they put more away. You can also do loans and hardship withdrawals and stuff like that. And you can do simplified administration for an individual or solo 401k.
Yep. And correct me if I'm wrong here, Hal, but obviously with the 401k, you have some extra options if you needed cash, for whatever reason, either for growth. As long as you were able to put it back in, there's no tax penalties.
That's right. There's some things there, and that's where the loans come in. And under the COVID-19 stuff right now, we've even got some new things, temporary things to pull stuff without any penalties. So we can come back and talk about that when we get to some of the COVID stuff.
Yep.
I used to define benefit plan as the other one I never used to see, but now I'm starting to see, and I'm actually recommending these, I see these for like a dentist, a business owner that's making a bunch of money, allows them to put a bunch in. I had a client that was selling off a business, going to make a bunch of money. They were able to put $700,000 for two owners into a defined benefit plan in 1 year, saved them about $120,000 tax each. They had a younger workforce, so there can be some real advantages on a defined benefit plan, and I'm seeing more of those than I ever used to.
So this is interesting for some of our pros. Just maybe if you ask your CPAs, hey, is this something we should consider doing?
Yeah.
Yep.
Okay, so one of my next items where I see people that make mistakes that could save themselves a lot of money.
Child labor, my favorite.
Yeah, using family. So this works for if you got children age 7+, and it's not the first 10,200. It's now 12,200. I thought I fixed that. The first 12,200 is tax-free under the current tax law. So they can make a bunch of money there. And if you want to go higher, they can do an IRA. So they could be doing a $6,000 IRA and putting that money into that. So you could even go at 16 2-year, not pay any taxes, which is incredible. But but it's got to be reasonable wages. But that doesn't mean it has to be low wages. As all of us know, there's a wide range of pay for the same type of job. And maybe the child has been doing this since very early. And I worked for Haney and Company. Dick Haney, the founder, is now deceased, had 6 children. One of those is deceased. And 5, that was his son. The 5 daughters are still living. 4 of those, well, they all started working when they were probably 7, 8 at the firm. 4 of those are still working at the firm. And,
Wow.
Been around for a long time. They liked it, but if we're in the right entity type, so this doesn't work on S corps, but it works if you're a sole proprietor or if you're taxed as a partnership. You don't have to pay the FICA and FUTA on that child if they're under age 18. So up to age 18, you can pay that without those taxes. They still get a W-2, but no Social Security, no Medicare, no unemployment coming out for those children.
Yeah, so it's going to save you about, what, 15% or so?
Well, that's 15.3% plus whatever your unemployment rate is.
Yep.
So that's big.
It's a big savings. So what about the coronavirus tips? Is that on the next one here?
No, let me see what else I got here. Home office. Let me just mention home office.
Yeah, this is a good one for, because I
CPAs
know a
are
lot of
scared
our
to death of home offices. Where it says BUP, that stands for business use.
Personal or something?
Well, it's the business use of the portion of the home.
Mm-hmm.
Okay, so a lot of CPAs are scared to death and say, no, that's a sure audit sign. If you do it right, I have never had one of these audited. And I brought in clients from all across the country working with groups because they said their CPA wouldn't do a business use of home, and I would. Now, I push them but the first thing you had to do is look at your percentage here. That's what's shown. What's the square footage of the office and what's the square footage of the house? And so you look at that. And so, if you look at all that, you can do that. And then we get to take that percentage and use mortgage, interest and property taxes, and utilities, and cleaning and office furniture decor. Depreciation comes over 39 years. We can increase our business miles because now this is our office. So when we leave home, we're leaving the office and going to a client or picking up supplies or whatever. All that mileage counts. So that's key. Let me see, I can't remember. Let me go back here. What keys though is it's got to be, that office space has to be exclusive use for your business. It could be even a corner of a room, but a corner of a room is not going to give you much of a write-off because that's very little square footage. So typically we recommend have an extra bedroom or something that way that you use exclusively for business. And what does that mean, exclusive use for business? Well, this is worst case scenario. This was an actual tax court case about 10, 15 years ago. A guy, it was his office. In his office, he had a sofa sleeper. The client sat on that couch. But one day he had a cousin came over and stayed a few nights, and they rolled out that sofa sleeper and that cousin slept on that couch. The tax court ruled no home office because he used it for something personal. Now, walking across that to get something or what they called the minimum use for personal use is okay, but the court deemed that sleeping in that sofa sleeper knocked it out. What should have they done? They should have picked it up and moved it to another room, and then he could have slept on it. So you really need to be strict on the business use.
So no den. So no den, no family room, a separate room. Typically, I've heard too, you need to be able to have a door, so close the door. So if there's an open portal too, it could be construed as a part of another room, but all kinds of stuff. And then no dungeons either.
Yeah, I've never heard the door thing. I haven't worried about that, but you really need to make it business use, and that's what you're doing for. Now, there's also another way. Instead of computing these mortgage property taxes, a few years ago, they came out with a simplified method. You can take $5 per square foot up to, I think it's up to 300 square feet, and you don't have to separate this stuff out. And so for many clients, that's easier. But for some, where I've got some clients that've got 1,500, 2,000 square feet, or they may have a whole basement. They're doing graphic artwork and stuff. And so they've got some big operation. That simplified method's not going to work for them. Okay, those are the ones that I had.
Yep.
Let me stop sharing here and come back.
Yeah, so let's talk a little bit about some of the tax strategies that you think are going to be relevant for, our pros, our home service companies that are dealing with the effects of coronavirus on their business. What kind of comes top of mind for you?
Okay, let me just get my notes back up here. I covered them up when I was. Okay, here we go. Okay, so there's been a lot of legislation regarding COVID-19. We've seen 3 rounds of legislation come out. They're working on round number 4 right now. And I know one thing that they're trying to get through on that I'll mention, and then supposedly another 5th round still could be coming. So one of the big things for business owners, and that's who I'm talking to right now, are these grants and loans for small businesses they put in. And there's some different types of ones that are there. One is what we call the SBA EIDL loans. And EIDL is an acronym, EIDL, which stands for Emergency Income Disaster Loan. Yep. And so that's one place to look at these. You apply off the SBA website for those. If you Google SBA EIDL loans, it'll bring you right to where you need to go.
Yeah, we covered those ones. We covered those ones yesterday. They used to have the long form one, which would take hours to prep, and now they've got the 5-minute one, which literally you answer a couple questions and a couple really easy, just revenue questions and cost of goods, and then you're good to go. So that's one we covered, and it's really handy.
Yeah, and there's really 2 parts of it. One's the 10,000 emergency funds. If you don't look for anything else, look for that, because you can do that 10,000. Along with the next one I'm going to talk about, the PPP loans, and combine those together. Where the EIDL loans have come in for some of my clients is, for example, I've mentioned where they own their building and their own LLC. You don't have any payroll in those typically. So the PPP loan is not going to work for that. But one of my clients who's got an SBA loan on their facility went back to the bank and they said, look, we can restructure this and delay payments and give you a lot more flexibility. And so it's not really taking out a new loan, but because they got the SBA loan, this EIDL allows them to do some things there to just give them more flexibility and more time to pay.
Yes, I think that's a good golden nugget.
So the big one, and this is one I've spent.
Yeah, I would just say that's a good golden nugget for some of the people that are watching. If they already have an SBA loan, you can use the EIDL as a reason to go back and restructure things and renegotiate some things and move things around and use them for different purposes.
Right.
Yep.
The big one that most businesses are aware of, the one I've spent a lot of time on, and every time we've published it, the next day the SBA comes out with more rules, changes it. I call it the PPP. That's the paycheck. The
protection
payroll
program,
payroll paycheck protection program, and it's based on payroll. And so that's the big thing, is you need payroll. If you don't have much in the way of payroll in a base period, then you're not going to get a lot out of this loan. And that's where going back to that SBA EIDL may give you more there. But it's got some great things and can be forgiven in full or partial, and that's a huge part of it.
Yep. Yeah, we covered that one. So you need to use at least 75% of it to cover payroll. And so one of the tips was, hey, put that in a separate account and then link your payroll provider. So if you're using Paychex, ADP, Gusto, et cetera, just to that and let it just auto withdraw is a really easy way to prove that's just being used for that payroll, because it will be forgiven. So it's about 2.5 months worth of free money where you can start taking that revenue that's coming in the door from your business side and using that for other things rather than payroll, because it's going to be forgiven on the other side here.
Yeah, and the forgiveness rules have not been I mean, there's what's in the law, but the SBA, when they came out with what they call their interim final rules, only the government gets away with an oxymoron like that.
Interim final.
Yeah. Part of it in there, they have one little sentence at the end of where they're defining what's payroll, and they say, we're not defining what the forgiveness rules are. We'll come out with those later, and they haven't come out with them yet. But we do know it's going to be based on 75% of it. It's going to be based on your payroll costs. So that's a key thing.
Yep.
You know, maybe you don't even need them forgiven. I've got clients that are applying because it's a 1% loan for 2 years, and they can have 6-month deferred payments. Now, a couple things.
Amazing rate.
Yeah, a couple things here. There's rumors that they're out of money on this loan. That kind of goes by bank. They each were given allocations. I found that the big banks want larger loans and they don't want to deal with the small businesses. Wells Fargo, for example, put out that they were out of money the day that, or the next day after. I mean, the day you could apply was a Friday. That weekend they put out and said they were out of money. I found locally here in Utah that the 2 larger credit unions are the most nimble and small business friendly. They're doing stuff faster and better, and they're even accepting businesses that aren't their clients. Of course, you're going to have to open an account with them, but
Sure.
They're working better than some of the big banks are. And so if you're having a problem with a big bank, find out one of the local credit unions and get one of the bigger ones. We've got 2 that are really big that have acquired a lot of other credit unions. They're more like a bank, but they're still a credit union. So That's a couple tips to look at. The Federal Reserve came out over the weekend and said they're going to put another 250 to 350 million into this plan. I won't say her name, but the House Majority Leader wants all kinds of pork belly projects put in and is holding that up. So I don't know what's going to happen with that.
Yep. But obviously the instruments are in place. So that way, you know, as you know, the government wants to put more money into it, that distribution mechanism is built. So it's going to make that easy. So this first bid, and I know we've talked to a lot of pros here that have applied and haven't seen anything yet. You know, the first wave is going to take a little bit. And after that, obviously, as and if this continues the way that it is, the government will be able to fund it with more money and then allow more money to distribute. So maybe it'll be more than, you know, the 2.5 months that was originally intended under the CARES Act. It'll likely be more than that, given that that's only, you know, a small fraction of the year's GDP.
Yeah, so I'm seeing some clients get that. I've seen a client that does, you know, online marketing websites, only a few employees. They got a $50,000 approval. Over the last weekend, a client that owns 2 restaurants, one of them got, I think, 240,000 approved, and one got 350,000 approved. In our Houston office, one of their clients got 4.6 million approved. So we're seeing a lot of different ranges on this, and approvals are coming in, and they're big. And when this came out, my suggestion was every small business ought to apply for one. And maybe a lot of others said that, and it's a lot more have applied than the government was thinking we're going to apply.
Probably. I also think, you know, it's so hard to estimate, you know, the impact of everything that's been happening. And, you know, when you put stuff like this out there, people are going to get smart and take advantage of it. And that's the same advice that we're giving to our pros, is take advantage of all these programs so that you never probably see this happen again in the rest of our lives, where the government's giving away this kind of money for essentially free or near free. I mean, anything at 1% or even the EIDL at, you know, 3.75 over 30 years. Those are all ridiculous rates. That's essentially free money.
Let's hope we never see something like COVID-19 again.
Yeah. Yep. Definitely. So are there any other final tips here before we jump into Q&A that you think would be helpful for our pros to see here?
You know, a couple things. I think probably everybody's heard about the recovery rebate stimulus payments, the $1,200 per individual, $2,400 for married couple, as long as your income's under the certain amount. You know, and it's $500 for each child that's under age 17. A lot of people have asked, well, what's wrong with the 17-year-olds? Actually, it's 17 up till 23 if they're in college that can still be claims as dependent. That's supposedly part of this next round, number 4, that Congress is working on. The 2 senators from Michigan are both pushing this really hard to have something for those that are between 17 and 23 that are claimed as dependent on a parent's return, so that they get a recovery rebate payment as well. So that could be coming. Watch for that. Some of the things, I think I've mentioned some, the HSAs, IRAs, those got also extended to July 15th, so that's big.
Yep, those are all coming in there.
One of the things that, let me mention, that I really recommend for businesses, and we published a thing a couple weeks ago for our business owners, how to survive an economic downturn.
Mm-hmm.
And it's, don't be an ostrich and stick your head in the sand. If you're having financial trouble, communicate with your landlord, with your vendors, with your lenders. Go see them. Write them letters, not an email, but write them an actual letter. And we've put some sample ones on our website that actually Intuit put out and just published this last week that they had an attorney write up for clients. Let me give you an example of this. I had a client that back in 2007 had about 80 real estate projects going, most of them up and down the Central Valley in California, some of them in the Phoenix area, had over $1 billion of loans. And when the crunch hit, basically he lost all that. But he went and saw every one of his lenders every week, and they all told him he was the only borrower that ever came to see him.
Wow.
And
it
they
seems
appreciated
like such a simple
him.
and straightforward thing to do. You know, I feel like that advice seems so simple, but it's amazing that, you know, no one else has done that.
Yeah. So, you know, if you can't pay your rent, don't wait till you're late. Get a hold of your landlord before that. Say, hey, I need help. They understand what's going on. They see it. They'd much rather have somebody that's working proactively with them than finding out after the fact that when it's 15 days late. So, you know, do that with vendors also. Do that with anybody that you owe money to. Work that out. Most of them, not all of them, but most of them are going to work with you. I mean, if they kick you out, if your place of business, what are they going to do? Who are they going to put in? You know?
Yeah. No, I mean, they would much rather extend the lease by however many months that you can't make it than have it just sit vacant and make no money on it anyways. So they're just choosing to get paid later rather than now. And I would say by and large, you know, you don't get what you don't ask. So go ahead and get out there, get out there and ask.
Well, I've heard of even some that have been a long time in the same place and had a really good relationship, have always paid on time, where they've actually gotten a month or two given to them for free. That's not all of them, but that's actually happening to some. So take a proactive stance. Don't stick your head in the sand.
That's great advice. All right, so we're up on the hour here. I'm going to bring Alexa back here. We've got a bunch of Q&A here, and obviously what Hal just mentioned too on letters and those things, we'll link to those. So if you guys want access to those, Hal will shoot us over the link, and we'll share it with all of you guys that are watching tonight. If you need any extra help, Hal can help with that too. So let's go through some of these questions, Alexa. We've been like over this hour, I feel like a lot have come in here.
There's a lot of good ones on here, but a lot of them are like very quick answers. So you guys, if you have a question on here, I'm gonna click answer live. So make sure you write down and tune into what Hal is saying, okay? Let's see, the first one is from Michelle. I made the mistake of filing my federal tax payments monthly, so I got stuck making a big old EFTPS payment the other day. It's my understanding that I can't switch to that schedule now, and honestly, biz is down more than 50%, so I think I shouldn't have to pay much next month. Any thoughts or suggestions to that?
Well, if you're paying payroll taxes monthly, that's because your payroll from July 1st of 2018 to June 30, 2019, your payroll taxes paid under 941 exceeded $50,000, and there's really nothing you can do about that. They haven't delayed that out. There is something we didn't mention where there is a plan where you can set aside the company portion of Social Security, not Medicare, just Social Security, and pay that in actually half of it at the end of this year, half at the end of next year. You can even put it off 2 years. So there is a plan for that we didn't get into. And that may be something you want to elect to do. You really need to talk to your payroll provider because they've got ways of setting that up.
Cool. Thank you, Hal. The next one here is from Lino, and Lino watches every single night. I recognize his name. So is it better to have a self-directed IRA, Roth? I'm not sure if that's the same thing or not. That's just the way the question's worded. Okay,
so a self-directed Roth can be great. It's not giving you any tax advantage now, so it goes in as after-tax money. The advantage is if you have it for over 5 years, when you go to pull money out, when you qualify at the right age, it's all tax-free. The SIP, the 401ks, those are ways to lower your taxes now. And if you're in a 12% tax bracket, the Roth makes a lot more sense. You're not saving that much in taxes. If you're in a 24 or 32% tax bracket plus your state, then that makes a lot more sense to use the traditional one.
Okay, so next one is from Alice, also another nightly viewer. I can't pay my kids if I'm an S Corp?
You can pay them, but you can't take advantage of not paying the FICA taxes. You've got to treat them just like a normal W-2 employee, like everybody else. You've got to be, it's the sole proprietorship or the partnership that allows you to take advantage of that law.
Mm-hmm.
So a next one is one we got a couple of times. Can I add my garage to the BUP?
Yes, and you can calculate that payroll, that square footage separately in a lot due. So you could just calculate that square footage. Your office one is in the house, that's out, and I just add that square footage onto it.
Okay. Yeah, because I imagine a lot of pros, that's where you park your truck, that's where you do your repairs, you do all of that, and that's used for that purpose.
Mm-hmm. Another home office question. For home office, is the calculation any different when it's in a separate building on your property, like a garage or a shop?
If you've got separate meters for utilities or that type of thing, then yeah, you can. If you don't have the separate meters, that's a little hard to do. But I've had a lot of clients over the years that as they've grown, they've built an outside shop office type thing. And a lot of them will put meters on just so that they can keep it all separate and write off the whole thing.
Gosh, this is like fire. I feel like we're throwing everything at you, and Hal's like, next.
Boom,
next.
boom, boom. I heard this one before. I got it.
40 plus years of doing this. So.
Let's see here. Cool. Yeah, lots of garage questions. Now another separate building question. You only have to, this is from Alice, you only have to offer 401k to full-time employees, right? What is the definition of full-time? More than 30 hours a week?
Typically, yes. And I always defer to the guys that really know all the in and out rules. But yeah, part-time people, you can often keep off of that. You could also set it up so maybe the first year or two people don't qualify, or they've got to have a certain number of hours to even qualify.
Let's see. This one is from Mike Flowers. What happens to the self-employment tax if I only pay half as a C Corp?
Well, it's what happens if you're a C Corp, the employee pays half as a payroll withholding, and then the company matches the other half. So the 15.3% is still being collected. It's just the company pays half and the employee pays half.
And then the company's net taxes or their net profit will be lower because that's pulling in from that, right?
That's correct.
So, yeah.
And then two more questions here. In a simple plan, capital simple, I don't know if that makes a difference. What percentage does the employer have to match? From Carl.
That would, there's a matching, it depends on how it's set up. And so oftentimes, you can have a simple without a matching. where it's all just employee contribution. We encourage employers to set up where they match, say, maybe up to 2% or 3%. It just depends on what their profitability is and how much they want to encourage their employees, because the more they match, usually the higher the participation rates.
And then the other component too is if they didn't have this offered, then they would be, maxed out or whatever the IRA contributions as an individual would be, which would be $5,500. I guess it's $6,500 now. Whereas you could get a lot more, 7,000 now. So you could get a lot more if you weren't, or sorry, if you offered it as a business to them.
Right.
Yep.
And then one more question from Facebook. This is Brian. I wrote it down here. Do I still need to fund SCP by tomorrow for 2019?
Nope, you've got till July 15th.
July 15th. I feel like that is a breath of fresh air for a lot of people. So that concludes our questions. Good on you if you put Q&As in there. You got Hal, who is an expert. Like, you would probably have to pay for that type of answer. So good on you for coming to this live webinar. And thank you so much, Hal, for spending the time with us and sharing your expertise. I know it was really helpful to a lot of people. And what I'm going to do with those answers that Hal just answered right now is I'm going to put them into a Excel sheet, and I'm going to put them into the Facebook group so you guys can go back and read them, because there's probably a lot of other people that this applies to. And other
we'll
than
also have that document too that Hal mentioned.
Yeah,
which is the document.
I can send Natalie the link to that.
That'd be great. It'd be great. There are people asking for it, Hal.
Yep.
Good. There's three different documents depending on what you want, and thanks to Intuit for this. They shared it with us as pro advisors. They had an attorney drafted. I don't know if she was an in-house attorney or they just hired her, but it's got some really good stuff.
Perfect. All right, so we have a lot of people here saying, thanks, Hal. You've been great help. Thank you. This is good.
Hal. And Hal, if people want to find you, if maybe they're interested in using your services, where can they find you?
Haney and Company CPAs is our website. So HAYNIE CPAS.com. You can go there. When you go to the team, you can find me there. But also on the news, if you go to that website, we've got a news link at the top. You click on that and you'll see, you can go to all of our COVID-19 things we've put out. Don't just rely on the one page that's there. You got to go back 2 or 3 pages. We've put out a lot of stuff over the last several weeks.
That is awesome. That's so important. I'll go ahead and post the link on Hal's website on here. We're getting a lot of thank you. The information was very wonderful. I feel like so many times this stuff is super daunting. So it's really like when you have slides to show us, when you can break it down like that, it's really helpful for all of us involved. And before we sign off for the night, I know we've been talking about this the last few nights, but we have 7 meetups this week. And we are super excited to have our first virtual Lady Pro meetup on Thursday. So if you are not signed up yet, Lily, if you're on right now, make sure you see the link that Lily is posting in the chat. If not, it is in all of the Facebook groups. Also the Pro Talk podcast. Those are another great resource. Download them. I know for me, I have a goal when I'm working to listen to 1 podcast a day. Not only does it make me feel not lonely working at home, it is super, super helpful when you're learning new things and you can implement them into your business. So it goes hand in hand with what we're giving you guys here on this on this live webinar. Other than that, tomorrow you have Workshop Wednesday with Roland, Natalie, and myself. And we're going to be teaching you Facebook 101, how to create a good Facebook marketing strategy that is just better than your competitors. You have 3 people who do this for their job. So we're going to teach you everything we know. We're going to make it digestible. You guys can ask us all the questions you want. Just to give you a little taste, we're going to be talking Facebook Live. So kind of how we're speaking to you now and how to do that with your customers. We're going to talk about how Roland gets like 200 people commenting on his post and how to do that. And we'll talk a little bit about boosting posts on Facebook on your Facebook page and the differences between a business and a Facebook and a personal and why you should have both and how to utilize both of them. So that's what you have to look forward to tomorrow. Again, thank you, Hal, so much. We seriously appreciate your time. Hal's a certified Housecall Pro partner, so hit him up if you need some help.
All right, guys.
You're
Thanks
welcome.
so much.
All right. We'll talk to you guys tomorrow. See you in the Facebook group.
Have a good night.
Bye, Mel.
Bye.
Bye, Roland. Bye, Hal.